Alright, so today we're going to talk about the mortgage secret that involves free money. And so this free money strategy is pretty simple. Firstly, we're going to take a look at the difference between an interest rate discount and some cashback. So what I want you guys to consider is that when you talk to the bank, they have no incentive to give you the absolute lowest rate going. What the bank's trying to do is maximize their profit across their entire customer base. And sometimes they will give you, their best rate, but quite often what they're trying to do is protect margin. On the flip side, what a mortgage advisor is trying to do is sit on the same side of the table as you and try and get you the absolute lowest rate that they can, so that you get the best deal, And what a mortgage advisor will often be privy to is what banks are offering the best rates and what rates your particular bank is offering. So to give you an example, at the moment 4.09 is a very common rate for a lot of clients fixing for 1 year across at least 3 of the main 4 banks at the moment. Now, why does this matter? Why does it matter to get 4.09% instead of say 4.29%? If you go into the bank and you say, I've got $500,000 mortgage, I want to fix it for 1 year, and they say, yep, cool, 4.29%, you think that's not too bad, and you just lock it in. Now, the difference between 4.29% and 4.09% is $1,000 in interest paid to the bank a year. So instead of paying that money towards your principal repayment, you're actually paying that in extra interest repayments. So you can see that just a small difference in the interest rate save you $1,000 in the first year that you work with a mortgage advisor to get that discount, and over the life of say 20 years, let's say 25-year mortgage, you're going to save at least $1,000 a year, knowing that you're going to get the lowest rate. And so over the life of your mortgage, you're probably going to save at least $25,000 or more, considering the power of extra principal repayments earlier, because you're going to be putting this money into the principal repayment on your main home instead of paying it as interest. So that's just one strategy over the life of your mortgage that you're going to save at least probably $30,000 in interest payments, and that you'll be able to make that repayment back to your principal simply by making sure that you get this discount. Now, another way that we want people to understand is that you've got to think that cashback is a good thing. And the reason is, if banks are going to offer clients money as an incentive to renew their mortgage with them or to switch their mortgage over, then you shouldn't ignore it. So for a $500,000 mortgage, you might be looking at $3,500 of cashback, and that will lock you in for 3 years. So let's just assume that that's locked in for 3 years. Let's just round down and say that over the course of every year, you want to get around about $1,000 a year at least in cashback for a $500,000 mortgage. So you can see with these two simple strategies, you're going to save $1,000 a year times 2. It's extra $2,000 a year free money. It's a very, very simple strategy. You work with a mortgage advisor, make sure you get this best rate, and make sure you maximize your cashback. And being loyal to the bank is actually costing you this every year. So when you think, oh yep, I'm already working with a bank manager, or I'm loyal to my bank, well, you got to think, would I pay $2,000 a year for the relationship with my bank when I can get a relationship with a mortgage advisor that knows how to get the better deal, who's got my best interests in mind, and over the space of 5 years, it's going to be worth 10 grand. Over the space of 10 years, it's going to be worth 20, 30 grand of savings simply by making sure you get a better deal. So this is the free money strategy. And we'll be talking about some more strategies soon.